Hi, good afternoon. Looks like you didn't enjoy lunch. Hi, good afternoon. Thank you so much for being here. It's a Saturday afternoon. I'm so sure you have lots of things to do, but you elected to be here. So we're really honored with your presence. But, I really take pride in what I'm about to do because I'm going to be sharing with you largely what's happening to the Philippines, what's happening to our country. At the start, the overarching idea is investing. However, if you're going to be looking at investing, you have to drill down on a basic format, a macro process where you have to start with a global view. Is it a good time to invest? And then you're going to drill that down and say, so where? Is it good to invest in the Philippines? And if ever the answer is yes, then the next question would be, in what? Because there are a lot of choices. So today, you're invited by your property specialist. Certainly, he or she would have been very interested in a way to introduce you to Albeo, to Ayala land. But I guess a real push or nudge wouldn't exactly be necessary. It's just that it's so exciting to share this, and maybe not a lot of you would have been very exposed to this being in Singapore. So somehow, I'd really like to get on with it. It's almost like I'm going to somehow summarize this by saying, if you can have a time machine and you can get back to Singapore probably 30 years ago, would you have bought and invested here? If you can go back 30 years from today, would you have invested in Singapore real estate? Because that's the kind of view that you're going to be having in the Philippines. We are where Singapore would have been over 20 years ago, where the infrastructure is just starting, where the real growth gets to be anchored in certain pillars that are strong. But you see, all of us have choices, and that's why we're looking at it on a global standpoint. It's just that no matter what's happening to the world, we probably would have thought, is it really a good time to think about investments with what's happening today, with all the geopolitics, that situation's turning bad with wars, and the threat of bigger wars. The second would probably be, headline negative things like inflation and interest rates. I get by with answering that, quoting one of my favorite guys in investing. He's the pillar of the mutual fund industry. The guy is Sir John Templeton, and he says this: bull markets are born on pessimism. They grow on skepticism. They plateau on optimism, and they die on euphoria. What does that mean? You have to be ahead of the curve. You cannot be an investor when things are going so well. Because when things are going so well, they're going to be pretty expensive. And besides, I go back to this. Regardless of what's happening to the environment, your journey financially continues. Your challenge to achieve dreams for people special in your life continues. So it doesn't really become anchored on what's happening. Everything has to be anchored on exactly what you want to achieve. But as I say this, many of you would have read, the Philippines is getting to be one of the favorite investment destinations in Asia. And while we say that, I can also say, oops, much like many places in Asia, it's still a very volatile market. We thought everything would have turned rosy at the end of September, and that run would have been good until we saw new concerns like Taiwan, China, the US. And suddenly it became also choppy again. And this gets mirrored not just in the stock market, it also got mirrored in the bond market. But some things are happening already. If you're going to be looking at the way this has been read by the end of the year, it's higher both on the short end and the long end of the curve. However, the early part or the first quarter of this year, we saw the long end go down. What does that mean? That people are already thinking that things are dissipating, things are simmering down. Interest rates would be slowing down, and inflation is actually slowing down. So there are silver tints that are showing up. But you see, if you're going to be looking at the Philippine inflation trajectory, we are on target. We are on target, and we know that this, by the next year, will be a backstory that we will see as an opportunity for current action. You see, as far as we're concerned, I really believe this quote by Dr. Kelly. He says, the key to successful investing is not predicting the future, but it's looking at the present with utmost clarity. If you're going to be looking at investing in long-term assets, you have to be looking at longer-term concerns. You have to be looking at longer-term fundamentals. And if we're going to be drilling it down using the context or the Philippine story, what would be the long-term issues and concerns that we'll have to look at? And this will be a picture of analysts and the pundits of the Philippine market. And we have cross-checked this with government, and there's a bit of an agreement over there that GDP will continue to be strong. Inflation, as I've said, will be history by 2024. It's starting to simmer down right now. We're close to a report that says it's now below 7, and that will come out by next week. You're going to be looking at indicators like unemployment, debt to GDP, that are all improving with a more stable exchange rate, whether it's a bull or a bear or base case assumption by year end. So, going through the same slide, there are a lot of, the consensus is the market will stop at about 7,800 to 8,100 by year end. And what will be the drivers of this? Number one is a full year of reopening. If you're going to remember, last year, the Philippines would probably be open less than 3/4 of the year. When Omicron hit, we were closed for about 3 months. Unlike Singapore, which was open the entire year, right? So if you're going to be looking at company performances, earnings-wise, we have a full year of opening compared to last year's less than 9. But the real catalyst would be a better macro view, as I've said. Inflation and interest rates. Just hoping that geopolitical tensions will not escalate. However, getting down to the real fundamentals, company earnings are there. We have seen reports for the first quarter, and the average growth rate of the companies that are listed on the exchange would be reports saying that they are growing 40 to 50% over last year. And that doesn't exempt, the big conglomerate that we are. Ayala Corp is going to be coming up with results. Ayala Land also, that's going to be made public. We're going to be within that same line. And as we know, valuations are very low today. The average in the Philippines would be at a multiple of about 17 to 18%. The multiples in the market today are at as low as 12 to 13. So what does that tell you? It's not a question of performance, it's a question of sentiment. It's a psychological issue, and markets almost always bounce from those. So, this is a report which a lot of investment houses like Goldman Sachs, JP Morgan, and even HSBC has agreed with. That the Philippines will be the world's 18 to 20th biggest economy in 2050. I just don't know if we're still going to be here by that time, right? But certainly, we should be able to enjoy the journey getting into 2050. But I see a lot of people who are still going to be here, I'm sure. Maybe some of us will be joining you in memory, right? But this is real. And there is a reason or a set of reasons for this. And let me get on with the pillars here. I think all of you know, tourism, overseas workers, remittances, OFWs, many of you are here. You're the new unsung heroes of our country. And the BPO industry, where, there were a lot of naysayers here. Tourism, a reason why we're not growing that for the longest time is because of infrastructure. I'm not saying this as a Filipino, but I can tell you quite frankly, the beaches in the Philippines are better than Bali. Right? But the man-made of Bali will beat the Philippines black and blue. Because they have a great airport, they have nice zoning, they have good roads. You can say anything there. That's the reason why the big conglomerates, the hoteliers, the resorts, Class A, would go to places like that. But the Philippines is starting to correct that negative. Overseas workers, they say that's going to turn negative because of the pandemic and because of global slowdowns. Much like the BPO industry with AI. You see, not a lot of people know that the Philippines has shifted from voice to high-level business process outsourcing that will be largely more creative and technical, that will be very difficult for AI to follow through on. So the numbers are there. We cannot really say that the global slowdown is going to be a negative. The truth is this. When there are global slowdowns, guess what happens? Companies abroad ship more jobs outside because they have to cut down on cost. If they have to maintain margins, if they have to survive and become profitable, they have to limit their costs. And cheaper talent or shipping some jobs to cheaper places will always be that option. Okay? The Philippines, already the fourth fastest growing tourism economy in the world, given the infrastructure problem. But when I share with you the infrastructure that's happening there today, you're going to be amazed with everything that's getting to get stacked up. As I've mentioned, companies and travel institutions would always mention names like Boracay right now, Palawan, Siargao, Ilocos with Pagulpud. Now, beginning to mention places like Calagos in Quezon. These are pristine places. They're not exactly as commercial as other places in the world, but when we talk about beaches, we talk about powdery, silica, sand, that's going to be in there. Overseas workers, bringing home more money. True, global economy made them slide down when it comes to salaries. But you guys here in Singapore, I know some had pay cuts. But did the Filipino bring home less money? No, when the Filipino gets a pay cut, they get another job. Because the guys back home are not gonna ask for less money. They always ask for more, right? I mean, they're not gonna be happy with less. And they don't care about what's happening to the global economy. It's what they need that they get to ask for. Guess what? The remittance last year hit 36.1 billion. This was only $6 billion in 2020. It's now 36.1. Overseas workers, all throughout in terms of number and revenue, right? The year 2000, that was only $90 million. By the end of 2022, it is $32.5 billion. So you're going to be looking at pillars of the economy that will be there for long. And that's the reason why the entire economy is doing pretty well. The driver in global growth will have to be emerging and developing Asia. Guess who's number one in terms of growth in emerging and developing Asia? It's actually the Philippines. Growing at a clip of 7.6 in 2022 and probably simmering down to a 6.5 to 7 within this year. And the bottom line of that is not actually a fluke. It is driven by a young population that drives consumer consumption. If you're going to break down our GDP today, it's not going to be manufacturing and agriculture anymore. That was a thing of the past. If you're going to be looking at it, it's going to be driven largely by services and consumption.